Thanks for joining me on my weekend webinar. I think this is the fourth in the series. Well, I say series, I'm going to keep these going because I really got to thank you. The number of viewers I'm getting, the number of extra followers, subscribers and likes and everything, it's building every week. So it seems like this is what you guys want. This is the way to go. So I'll keep doing these every weekend. So firstly, thanks for all the support. Really appreciate it. Not much point in doing this if I don't get views, but I definitely am. Okay, today we're going to have a quick look at crypto. There's a lot to talk about in the dollar, probably a reversal going on there in the dollar. I've been watching that for a couple of weeks, as you know, starting to get some confirmation there. But the question is, which pairs do you want to be looking at if you want to try and take advantage of what I think is going to be a sinking dollar? Gold and silver, we'll have a quick look at those. They both look like they're going lower. Then we'll have a look at the yen pairs. It looks like the yen has reversed, start to climb now after a very significant drop. So the yen pairs will sink. What else? And we'll finish up with the stock market. So I better get cracking because there is an awful lot to cover. Okay, crypto. As you know, I've been a crypto bear. If you've been following me on any social media for the last 6 months, I have been calling crypto lower and lower and lower. So it's worked really well. All my targets have been hit. Every time Bitcoin bounces, it runs into a resistance level, turns around and sinks. So it's been pretty simple, really. You know, the charts have worked very well. Just the moving averages, the fibs, the trend lines. And again, well, we overshot the moving average here, to be fair. And we got up to, where did we get up to? Come on, where are we? Anyway, we got close to 22,000, 21,850. And of course, we turned around again. When we did jump up again, that was yesterday, we got 20,865, which is just short of the 20,930, 23.6% fib. Look, there is no, I'm reading a lot of stuff on social media. Everyone's talking about how, crypto's so cheap. It's got to bounce. I just don't see it. I might be wrong. I hope I am, especially if you guys own it, but I just don't see it. Below the 200-week moving average now. I don't think that Bitcoin's ever been below the 200-week moving average, has it? Here we go. Look, let me scrunch this up and show you. So that's what I'm trying to do. There we go. Yeah, Bitcoin, the 200-week moving average started in 2018, because obviously this is a pretty new financial product. The 200-week moving average, we've never closed below it. So we had this big crypto crash. That would have been at the beginning of 2020. So I'm guessing that's the COVID crash when crypto followed the stock markets down. Now, we didn't even spend a week, we didn't close a week below the 200-week moving average there. We bounced straight back up, straight up through the 100-week moving average and absolutely soared. So that proved to be a really big buying opportunity, as indeed it was for the stock markets, of course. So I don't know, there might be some correlation there between the crypto and the US stock markets because, of course, well, crypto turned actually before the US stock markets. That was back in the middle of November. November the 16th, that was when I called it. If you follow me on YouTube, you'll have seen me making the crypto videos and calling it lower and lower. Anyway, now for the last 3 weeks, we have closed below the 200-week moving average. So it's just further negativity. I just don't see anything positive. I don't see any reason why we're going to turn around in crypto yet. Ethereum, just a quick look at Ethereum. Again, plunging. We don't even have a 200-week moving average on this, but look, we have come down so far. But still, I just don't see anything to tell me that I should be buying this. And believe me, I want to find something. I want to be the guy that calls the low in crypto and says, look, this is the reason, here we go. But I'm just not seeing it. There is no pattern. There is no candle. There's nothing telling me that this is about to reverse. We're oversold on the weekly chart. That doesn't mean anything. Maybe we can get a small double bottom. Again, look at these fibs working so well. Confluence of fibs around 1250, 1280. And if you've been subscribing to me, you'll know that was where I was calling my last short position. And of course, it's worked quite well. Now, I guess we could get a double bottom here, but it's going to be such a small one that it's not really going to be that significant. It might trigger a bounce as far as 1500, but that isn't, that's not much of a recovery, is it? Anyway, we'll keep an eye on it. We'll look at it again next week, and maybe the situation will change. But for this week, I really think that crypto, the risks are to the downside. Okay, on to the meaty stuff, the US dollar. Now then, this is a chart going back to 1980, 1985 actually was the peak here. If you've followed me for the last 2 weeks, you'll know all about this, so I'll run through it quickly. But the 38.2% Fibonacci level, the retracement level, taking the peak of 1985 down to the low of 2008. Was it 2008 or was it 2009? 2008, which of course was the global financial crisis crash low. The dollar crashed as well as the stock markets. Now, that whole period where you went from 164.72 down to 70.70. Wow, what a drop. Not far short of 100 points. Big move over a very long period of time. That was from 1985 up to 2008. What's that? 23 years. So, since then we've had a good recovery from 2008 up to 2022, which in my maths is 14 years. So it's been a really good run. But we've got very close to the 23.6% fib, which is at 106.60. Now, where do we get to? 105.78. So that is within, let's call it 80 pips of that big Fibonacci resistance area, and 80 pips is absolutely nothing. Whoops, I didn't mean to do that. 80 pips is absolutely nothing when you have come from, oh dear, that's gone messy. When you've come from, where do we go? I just want to quickly tell you where we've come from. 2008, that's 2011, no, we can't. There we go. Yeah, well, look, let's call it 2011 because that's when it really started. That was a second dip before we rallied. Not quite a double bottom, but anyway. 72, 70 up to 105.70. So it's a pretty good, what's that, 50% run? That's a big old move. Now, when you've moved up, what did I say? When you have moved up 35 points, 35 big points, then 80 pips, 0.8 is nothing. So I would say that we've as good as touched that that important Fibonacci level at 106.60. And the sellers, the longer term traders, I guess, know this. And maybe this is why they're now starting to exit the dollar. Bonds have been falling, bond yields have been falling, bonds have been climbing. Seems like there's speculation that we're going to hit a recession sooner rather than later now with the more aggressive Fed interest rate action. Weekly chart, I would have liked to have seen more of a negative candle here. We've got a big green body. Now, we did peak at 105.63. So we did peak 15 pips below the previous peak. It's good enough for me to call that a double top. But I would have loved to have seen a red-bodied candle, or at least some sort of shooting star, or something with a long upper wick. We don't really have a long upper wick. We have something of an upper wick. We're very overbought on this slow stochastic. We have negative divergence on the stochastic here. Can you see on the daily chart? There we go. Put a ray on there. Okay, there you go. Can you see that downward sloping trend line when of course the price didn't do that on the daily? Now this is slightly more encouraging for my theory of a reversal in the dollar. These last two candles, we've got long upper wicks. On Thursday we have the red body on the candle, showing that not only do we try to retest the high from June at 105.78, and we couldn't. We failed. That was on the last day of June. First day of July, we tried again. This time we got a green body candle, not a red body candle, which is slightly more positive. But I must admit, if I was long the dollar now, I would be quite nervous after those two candles and potential formation of a double top there. The long upper wicks help me, as I say, and then we've got the negative divergence on the slow stochastic at the bottom there. So I think, look, as a trader, you're in the game of risk versus reward. No one knows what's going to happen. I don't know for sure what's going to happen. I'm just trying to put a picture together, trying to read the demand and supply from the chart and figure out, is it worth trying a short position in the dollar? Because I can probably look at maybe 150 pip risk on the stop loss if I were to sell the dollar index here, and on the downside, well, I'm looking at least 200 pips just to start, because the first target would be 103.50, 103.40. Now that is a good support level, by the way. If you are watching, if we do come down next week and you are watching the dollar index, 103.50, 103.40 is actually a good support level. We've got the 50-day moving average there. We've got a decent trend line going back to the end of March. That's 3 months old. And we've got a confluence of Fibonacci levels there. So that will be my target, and that will be the support. And that's all I'm going to say on it right now, because I need to move on. But if we do start breaking above 105, let's say 106.00, let's say 106.00 next week, then maybe we go to 106, 106.50, 106.80, and that's a real test of that fib level. Then I'll be looking for a negative pattern, some sort of negative candle on the weekly chart to confirm that it is the peak. That's all I can say on the matter right now. But for me, I favour a move to the downside in the dollar because of this potential double top pattern at a very strong resistance level. Now, how does that translate into some of the Forex pairs? Well, actually, it's not as easy as you'd think. The euro versus the US dollar looks like it will recover. We've got what is probably a triple bottom. Now, triple bottoms are extremely rare. Normally, double bottoms hold, triple bottoms don't, but they did on Friday, this did on Friday. Look, we've got the first peak around the second week of May, second peak, trough, the low. The second low at the second week of June, and then we've got the third low at the end of June, beginning of July. So yesterday's candle, again, I would have liked to have seen a green body on it, a bit like we did on the 30th of June. The Friday, the 1st of July, we didn't get the green body. We got the red body, but we've still got a couple of long lower wicks, which is encouraging. Again, divergence, a little bit of divergence on the slow stochastic on the daily chart. As you can see, this we haven't quite come down to this area here below the line. We're holding above that 20% line. That's encouraging. So look, I think it's got to be worth trying a long in the euro. If you're a subscriber, you're probably already long over the weekend because, of course, I had a buy level at 104. Well, I had a buy level around 104.50 because I wasn't sure if we were going to retest that previous low. Now, where did we get to? 103.65. I had a buy level at 104.60, 104.40, and I had a buy level at 103.80, 103.50. So if you're a subscriber, you're probably long over the weekend, and I would be encouraged. You know, I would say that this is worth a try. I hope you're still holding those longs. You know, you're looking at maybe 100 pip risk on this because your stop is below 104.25, 103.25, should we say. 100 pips is definitely worth the risk because the first stop for this long position is 106.00, 106.20. So we're from where we are now, we're already looking at potential 200 pip just on the first leg of the recovery. In fact, it's really just a test of the first resistance. You can see my trend line going back to February. You can see the black 50-day moving average, and you can see the 23.6% fib at 106.22. Now, anywhere from 106.00 up to 106.20 is a strong resistance level. It ties in nicely with these little swing highs that we had up there anyway, when that resistance was rejected at around 106.00, 106.20. So clearly, that is the level to beat for bulls. And I wouldn't be surprised to see us fall if we test that on Monday, Tuesday, or Wednesday. I think we probably will pull back. The question is, how far do we pull back? Now, if we only get back as far as 105.00, that will be encouraging. It'll show the buyers are coming in at higher levels. And then eventually, if we can get through 106.40, that'll be a buy signal. And then we should accelerate quite quickly up to the next area, which is obviously 107.90, 108.00. That's where the 100-day moving average is. That's where this little peak up here is at the end of May. Nice price action to confirm it. This low here in March. And even this little swing low down here around the middle of April kind of confirms it. So that's going to be a big level. We'll look at that when we get to it. I don't want to spend too much time on it. Now, obviously, if we do break below 103 sort of 25, you would want to activate a stop loss on the long because there is a risk of a further move to the downside. Then I'll switch over and look at the dollar index and see what happens around 106.60. So tune in next week and we'll examine that. Now, this was interesting. Now, I'll be honest, this fooled me. This is the New Zealand dollar versus the Aussie dollar. It's a really interesting close because taking my fibs here, right, here we go. And this is actually more encouraging that we probably have seen a low for the New Zealand dollar versus the US dollar. There we go. Okay, so we had what seemed to be a pretty clear double bottom pattern here as well too. When you were looking at the euro and also the Aussie versus the US dollar, there was some double bottom patterns all over the place, backing up my theory that the US dollar is going to sink. But the New Zealand dollar plunged. Now, that for me was a break to the downside. Now, I will admit that I wasn't trading on Friday, but if I was, I would have been shorting that. I would have thought, right, this is a break. It's a very clear break of the 61.8 Fibonacci level, which is at 62.30. There we go. Where is it? 62.30. So, shall I just open that? There we go. So really looking quite negative for the New Zealand dollar. Now that it's still a bit dodgy because we closed at 62.06, which is just below the 61.8. But when you look at there is some positive divergence actually on that slow stochastic, but I haven't got time to show you. I'm trying to whiz through this, get as much into this webinar as possible. Slight divergence, slight positive divergence, nothing serious. I wouldn't pay too much attention to that. But look, this long lower wick here, spiked down to 61.40, recovered by a good 60 pips to 62.06 from 61.46. So I think that's a 60 pip recovery in my book, leaving a long lower wick, which I must admit you can't see very clearly on this chart, but take my word for it, the low is down here. Now we closed above the two previous lows. I think we did. What's that low? 62.13, not quite, but we certainly closed above the previous low in June, which was 61.94. So that's actually quite encouraging. Not sure if I'd be jumping straight into a long position right now for the New Zealand dollar versus the US. I think I would wait a bit more. Let's see if we retest that low, get another similar candle like that, long lower wick, sort of hammer style candle. But that's quite interesting, that development right on the close. We really did soar. Now, something similar in the Aussie dollar, I think, if I remember correctly. I haven't had a good look through my charts, so I'm kind of looking at them with you as I, for the first time this morning. Delete. Yeah, actually delete all trend lines. I think that's what I need to do with this one. There we go. Put the fibs back on. It didn't work. I believe I'm getting a lot of you into fibs. A lot of you didn't use them, didn't know how to use them, didn't understand them, and I think I'm getting some great feedback from you guys. I really do appreciate the comments, and hopefully you're learning how to use fibs. They're very, very simple, but they're just so easy, and they just quickly give me a roadmap. And also I can see if now here it's quite interesting because the price levels are not actually lining up very well with the fibs at all, which means I don't really trust them. What can I say about this weekly chart? Now, this is quite interesting. Okay. Another reason why the Aussie could also be a currency that will rally against the US dollar. Now then. Okay. So 50% is 57 from the low in 2020 up to the peak in 2021. We've slowly crawled down, really, when you look at it on the weekly chart, to the 50% fib, which is at 67.57. We got to 67.62 on Friday. So we got to within 5 pips of the 50% fib. And there is also a pretty decent trend line, not quite a year old, but getting on for a year old. It's actually almost, well, it's over 10 months old. Coming in exactly on there as well. So if I were to zoom in a little bit, there we go. You can see how the price just kissed the 50 and that 10-month-old trend line and bounced. So is that an indication that the Aussie dollar is also going to start to strengthen against the US? I would have liked to have a smaller red body on that candle. That would have really given me a little bit more confidence. Oversold for quite a long time on the slow stochastic. Again, I would wait a couple of days. Just wait. Do we retest that low? Can we get some sort of double bottom, something, or a retest, and then get a long lower wick and a little green body candle, something that tells me that the buyers are quite aggressive. They weren't aggressive on Friday. I like the way they held the support level at the 50 fib and the 10-month trend line. Maybe that's enough for you. If you know, you could, a very small long position could be worth it with a stop below last week's low, 67.62. We could put a stop in at say 67.45. If you're buying it around where we close 68.14, that's not much of a risk, is it? What are we talking? We're talking whatever, 70 pips, 75 pips. Not a big deal, because of course if we do recover, we could be up at 69.50, 70, something like that, 70.00. Anyway, I'll leave that alone as well. I'm actually going to wait for it to develop. If you're a subscriber to those two pairs, obviously I'll keep you updated. Canadian dollar on the weekly chart looks like, well, this is the US dollar versus the Canadian dollar, and it does look like the US dollar can continue to sink a little bit. Already the dollar's seen weakness against the Canadian dollar, and there is good reason for that. If you have been with me for a few weeks on the webinars, or follow me on YouTube, or you're a subscriber, then you'll already know we were getting short up here because of the move fibs and the moving averages. We'd already had a good run. There was a trend line up there as well on the daily chart. So it's not surprising to see the market reverse, but it's been difficult. It's been really choppy here. This is the kind of thing that doesn't work for me at all. Getting chopped around. Look, this candle with a long lower wick. Then we get a recovery, which is what you'd thought might happen because obviously the buyers have been quite aggressive around the 50-day moving average. Then we get a spike up and a pullback. So again, this one looks tricky. I think for me, the only pair that I would be looking to get into immediately would be the euro versus the US dollar, because that one stands the biggest chance of a rally, and it is the most heavily weighted currency in the dollar index. The euro is, so it's usually quite a good mirror image of the dollar index. Okay, I think I've said enough on the dollar pairs. Actually, I'm going to look at the yen pairs. So what a nice way to do it would be to start by looking at the dollar yen. Okay, the dollar has been soaring and the yen has been really sinking. So that pair has, we have seen one heck of a move, because of course the trend for the yen has been down and the trend for the dollar, US dollar, has been up. So this has been an exaggerated move, to say the very least. Okay, since the beginning of 2021, that's only 18 months ago, we're looking at a move from 102.57 up to 137 something, isn't it? 137.00. Okay, so huge, absolutely huge. Almost 100, almost 35 points. Wow, that really is massive. That would be a 35% move in the dollar versus the yen over an 18-month period. That's big. Okay, what next? We've got a couple of dojis here on the weekly chart. So not particularly negative, but it does indicate there's more of a stable environment. There's more of a balance between buyers and sellers in what is obviously an overbought situation on the weekly chart. So that to me doesn't say short this. It doesn't say that this is a peak, but it does say we're probably going to enter a period of stability. Now, if you were with me the last 2 weeks, I've shown you why the dollar yen has broken above some important resistance areas. So we're not actually facing a resistance area. We're not actually facing any sort of level where I would be saying, now be careful here because this market could turn around. We're not doing that. But we are severely overbought. We've obviously had a huge move to the upside. So we seem to be running out of steam. I think that's the best sort of description I can give to this market. We seem to be running out of steam. It's not enough of a pattern for me to say, hey, this is definitely worth a short position. You know, the dollar index definitely is worth trying a short position. I'm not saying, you know, it's guaranteed to make money, but I think the risk versus the reward is probably worth having a go. Now, this isn't really much of a double top pattern. The previous peak was beaten by about 30 pips on Wednesday. We have sunk back. We did hold this trend line. We haven't got any particularly negative candles on the daily chart, and we don't have any negative candles on the weekly chart. We've only got a neutral candle on the weekly chart. So I think we're probably going to enter a period of stability, and probably the wise thing to do is here would just be to wait and see, you know, scalp the levels. Perhaps we'll build some sort of head and shoulders pattern. But I think the summary would be that I think we're probably done as far as upside is concerned, but jumping into a short position now wouldn't be ideal. Probably this is going to turn out to be a sideways pattern for a few days, maybe weeks, which is ideal for scalpers. If you're someone that likes to come in and, you know, move in for 50 pips, out for 50 pips, trading support and resistance, this could be the market for you to trade. Now, when you look at the euro yen, this really does emphasize how strong the dollar's been, because of course the euro has not performed as well against the yen. The yen has certainly been weaker, and we have certainly seen the euro appreciate against the yen, but not we do have a negative pattern here. So we definitely have a double top here, and I could even argue a triple top. This candle here on, was that Tuesday, with the long upper wick, small red body. We tried it again on the Wednesday. Tried to get up higher, tried to retest the previous highs. What I'm trying to say. Didn't work, turned around lower on the day, and look, it's almost like the bulls were bashing against a door, couldn't get through it, and in the end they just got pushed back, and then they've come all the way back to what is the 23.6% fib. Good support around 139.60.50 on Friday. 139.75 was where we got to. I can't remember what I put on my sheet. Let me have a quick check. This is my trade ideas spreadsheet that I put on every morning for my subscribers, and actually I'm not happy with myself here because I've actually not put that support level on there. 139.61. Well, I would have put 139.65, 139.45 as the buy level, and we didn't get there anyway. So it's not like we've missed an opportunity. We didn't get close enough to that level. So there you go. But I need to do better with that. Okay, so we bounced off there. So at the moment, it's a sideways pattern, but I think emphasis, you know, I think I have a bias to the downside. I think this will start to crack to the downside. I think the yen will start to appreciate against the euro. We'll see. Clearly, that 139.55 area is important. We've got a trend line, decent trend line, going all the way back to March, coupled with the 50-day moving average at around 138.70. So a break below there would be more negative for sure. We'll have to look at that maybe next week. I've got a feeling this is going to trade sideways for a little bit, build a top. But we already have a potential triple top, which again is rare and quite negative. So for me, the risks are to the downside for the euro versus the yen. just thinking to myself, I'm thinking that the euro will drop against the yen, so I think the yen will be stronger. I think the dollar will drop against the yen because I think the dollar will be weaker, and I think the yen will be stronger. So that's quite interesting. But I think the euro will appreciate against the dollar. So I'm looking at dollar weakness, yen strength, euro strength. I think that's what I'm trying to say. Okay, Aussie versus the yen. The Aussie was weaker on Friday. We've already seen that against the dollar. And of course, it broke lower against the appreciating yen. Real nice breakout of this triangle, actually. I think I want to try and show you the 4-hour chart. This was where it was really apparent. Let me try and get that up here. Okay, real nice triangle pattern. For those of you, for subscribers, you'll remember I posted this in the private Telegram channel, and I said a break below 93.20 would be our sell signal. I warned you that this had to break soon. We were coming towards the apex of the triangle, so it wasn't rocket science. We were obviously having to break either higher or lower. We broke lower. The breakthrough 93.20, you probably would have had to have had a sell stop to enter order because it happened quite well. So it happened while I was doing my reports, which I know would have been sort of 3 or 4 in the morning UK time. But what a move! I mean, that really has that would have produced some very big profits super fast as well on that breakout. So that really was quite nice. Anyway, okay, so if you did manage to jump on that trade, well done. Tasty profit. You would have been in some serious profit by the time you woke up, actually. I did have this as a support level before, 92.60, but I took it out on Friday. Thankfully, I took it out. For some reason, I just thought if this breaks, we're going to get through there. So I had it as a target instead of a support level. And of course, we did break through it. We've closed below the 50 and the 50-day moving average and the 23.6% fib. So it does look like the Aussie will continue lower against the yen. And for obvious reasons, 90.40 being the 100-day moving average looks like an obvious target. I've got a confluence of trend lines here intersecting with a 38.2% Fibonacci level, which is at 89.95. So that really is where I think we're probably going. And that will be a big support level, so we'll have a look at that next week if that gets hit, which I think it will. Okay, gold. I talked about gold breaking out, and it did break out. And actually, I'm just seeing this chart. I didn't look at this chart yesterday, and I'm just seeing how we've broken down, plunged as expected, got to the target, which is an obvious target. We had to retest the May low, but look at that. We've rocketed off there. Now, I didn't expect that. I expected that level to be tested, but I didn't expect buyers to be so aggressive. We overrun to 1783, but we've closed unchanged. In fact, we've closed slightly up on the day in gold with a little green body. Now, I have to say, that's a bullish candle. And I was already to say, right, gold's going to sink. But look, we've bounced straight back to that trend line. Let me have a look at the weekly chart. This does not look so positive. We broke 1830. We've been holding below there for quite a while. The moving averages are almost turning down. This trend line held on a closing basis at least. The weekly chart does not look as positive. Not really. The daily chart indicates that we could have some sort of recovery. So what I need to do is take these off. I'm going to try from this all-time high or retest of the all-time high, see where that takes us. And the fibs are not lining up the way I would like to see them line up. So I'm going to put some trend lines on. I probably need to do something like that. I'm not happy with that trend line. Actually, that needs to come off. What have we got here? So there's my triangle. There's an obvious short-term trend line. Just looking at the daily chart that does something like that. So there are a few obstacles for gold to get through. I wouldn't necessarily be an aggressive buyer of gold right now. I don't think so. Even after that positive candle, what that positive candle does do is warn me that we're probably going to trade sideways again. We've traded sideways for such a long time, and I hated this. This is very difficult for me to trade, not the kind of market that I like. And I fear now that we're probably going to go sideways again. We'll then, when we get to this trend line, we'll see if we hold it in. We'll see if we then break down. Okay, so that's a surprise for me. I was all ready to tell you that gold is going to collapse and sink a lot further, but that indicates that probably the beginning of the week we'll trade sideways. Now, silver looks particularly negative. We broke the previous low from May, plunged through it, so I can take that off now. I'll put another set of fibs on just to see if they line up, because if they do, it might indicate to me that we can have some sort of recovery, but I don't think they do. Let me just try it from this peak here. That's a nice little swing high. No, not really. Now, when you look at the weekly chart, it's all about the weekly chart, really. Broke through what is a 50% fib, taking the 2020 low, broke below that, broke below the previous low, which I think was May. Yes, it was. Broke below the 200-week moving average. So silver really looks negative. If you follow me on my silver report, then hopefully you've done quite well, because selling the break below the 200-day moving average would have been lovely. Where did we get to from 2020? We fell 100 pips. So that was a big move on Friday. Whether you would have taken the profit down there, I don't know. I don't think I had that as I'm not sure if I had that as a level. I must check. But 1865 is obvious. The 61.8% fib. So it looks like we are going to go there. And I think that any gains will be limited in silver now. Anyway, I'll stick them on the report. I'm not going to go into them right now. I need to do a bit more detail on some other charts in order to get all the resistance levels anyway. Okay, so from last week's webinar, I think I got the dollar right. The dollar hasn't sunk, but it did peak as expected. Gold did go lower, which is as expected, although I didn't really think that we'd have that strong bounce on Friday, if I'm honest. One thing, the bonds, they did turn around as well. Bond yields, the 10-year T-note yield has sunk, I believe. I need to check that actually. But one thing I didn't really get correct was the stock markets. Now, initially, the stock markets pushed higher Monday and Tuesday. I think it was Monday. Let's see, Friday, Thursday, Wednesday, Tuesday, Monday. So by Friday, we'd soared. And when I talked to you last week, I was like, okay, finally, stock markets are breaking up. This is where I think we're going higher. Now, I thought we were going to test this resistance and probably break through it. Now, I got that wrong. The consumer confidence number that came out, I think it was Tuesday, triggered a big move to the downside. Here, this was it. And we didn't recover. So the resistance level certainly held around 12,350, 12,450 in the NASDAQ, even though we didn't quite touch it. And we've come back down again. I still think that the bulls are in with a chance. I still think that they will group this week, and I still think that we will get a recovery. However, this is what will concern me. We didn't lose all of the previous week's gains, so that's good. We've got a big support level around 10,800. We didn't quite get there last time. The bulls came in, bought ahead of that level, but I am concerned about this red candle. So I don't know. We are in a bear trend. We have been in a bear trend for 6 months. We may continue lower and finally test 10,800, 10,700. That's the big level. Keep it in mind. Okay, we are we're 900 points away, 800 points away from it. So it would be a big drop, and we're already very oversold on the weekly chart. But for me, that would be a buying opportunity. So we'll see what happens this week. We'll examine it again next week, but just keep that number in your brain. But now I would not rule out a test of 10,800, 10,700. Dow Jones holding up a little bit better. We tested the big support level and we bounced off it nicely. That was at 29,700, 29,600. Big strong green candle off there, and that was really encouraging for me. That's why I thought last week the Dow Jones and the NASDAQ, well, Dow Jones in particular, should have a really good run, and it just wasn't to be. So I definitely got that wrong. Bit of sideways action. Whether we retest that 29,700, 29,600, I don't know. Certainly possible. If we do, I'll be looking for a double bottom low, and that will be a nice base for the stock market to bounce off it. But right now, we're kind of in no man's land. I wouldn't know what to do here. I need to wait for a pattern. Hopefully, the ideal scenario for me would be a retest of that low, which is a big support level on the weekly chart. Get the double bottom in, then I can say to you, okay, guys, this is good. This is probably going to lead to a nice summer rally, maybe into mid-August, and probably then the market will turn around and go down. But we'll worry about that later in the month. S&P has never looked as strong as the NASDAQ. Well, it doesn't look as strong as the NASDAQ and the Dow Jones anyway. We've turned around and sank. The 3650, 3640 would be a real nice support level. You've got a bit of a trend line down there, previous low. I think we'll probably test it. We tried to get through 3915, but we couldn't make it. We didn't close above there. I don't really have a lot more to say. The chart isn't very clear for the S&P, so I would have to wait with that. Right now, honestly, if you said put a trade on, put a gun to my head, I wouldn't really know what to do. It would be a complete gamble. Okay, I'm going to put some offers in the description box, particularly if you like what I do and if you want my trade ideas and my analysis every morning, email to you everything. Forex, gold, silver, oil, stock markets, FX, everything. If you want all of that, plus my cheat sheet, I'll show you my cheat sheet. Where is it? There we go. Cheat sheet of trade ideas. You get that every morning, email to you. Seems to be really popular. Then just go to my website, daytradeideas.co.uk, and you can have a look at the products that we offer. The premium is the one that gets you everything. You get my private Telegram group with updates during the day. You get to speak to me whenever you need me. You get the cheat sheet that I just showed you. You get reports on everything. The gold package is is significantly cheaper, actually 25% cheaper than the premium membership. You don't get the Telegram group, but have a word with me, and if I'm feeling in a good mood, I might even give you that for free. Okay, so please have a look at my website. You know my YouTube channel because you're probably watching this on YouTube anyway. Have a look in the description box for an offer where you can open an account with my recommended broker. You can deposit funds, and as long as you trade quite regularly, they will give me a little bit of commission on every trade, and that will allow me to give you my service for free. So that really is the best offer I can give you. Everything I've got for free. Talk to me whenever you need me. I'll give you my WhatsApp number, and you don't even have to pay for it. All you've got to do is execute some of my trades and hopefully make some money. That's it. Please like, share, please subscribe. Really helps me, and join me next week. Comments. Give me comments. Give me your thoughts on the markets. I really want to hear them.